Seoul, oil prices fell on Thursday on expectation that members of the OPEC cartel will step up production in the face of concern about supply from both Venezuela and Iran. A surprise buildup in U.S. crude inventories also weighed on prices, driving the spread between Brent crude and U.S. West Texas Intermediate WTI close to its widest in 3 years. International benchmark Brent futures were down 27 or 0.34% at $79.53 a barrel at 3 a.m. Greenwich Mean Time. U.S. West Texas Intermediate WTI crude futures were down 17 or 0.24% at $71.67 a barrel. The Organization of the Petroleum Exporting Countries, OPEC, may decide to increase oil output to make up reduced supply from Iran and Venezuela, in response to concern from Washington over a rally in oil prices, OPEC and oil industry sources told Reuters. Concern about supply from Iran and Venezuela, following new U.S. sanctions, had pushed both Brent and WTI to multi-year highs, with Brent breaking through the $80 threshold last week for the first time since November 2014. The chat is still that OPEC will do something at its June meeting in reaction to the looming prospect of a fall in crude production and exports from both Iran and Venezuela as the year progresses, said Greg McKenna, chief market strategist at AXA, a Forex and CFD contracts for difference provider. OPEC and some major non-OPEC oil producers are scheduled to meet in Vienna on June 22. The group previously agreed to curb their output by about 1.8 million barrels a day to boost oil prices and clear a supply glut. Any signs that the group may be heading towards an early exit from the production cut agreement would weigh on prices, ANZ Bank said in a note. Meanwhile, commercial U.S. crude inventories rose by 5.8 million barrels in the week to May 18, beating analyst expectations for a decrease of 1.6 million barrels, the Energy Information Administration (EIA) said on Wednesday. Elsewhere, Libya, which is an OPEC member, cut its oil production by about 120,000 barrels a day as unusually hot weather prompted power problems, an official from the National Oil Corp said on Wednesday. Stephen Innes, head of trading for Asia-Pacific at futures brokerage Oanda in Singapore, said prices were getting some support from talk that OPEC, Asia's largest refiner, would increase U.S. crude oil imports to a record high. Recent flow is suggesting short-term traders are looking to sell the $80 a barrel chart toppers, anticipating a possible compliance shift within the OPEC non-OPEC supply agreement, he said in a note on Thursday. Reuters.